we're good to go. All right, so I'll get started here. Thank you, everyone, for joining us tonight. Thank you for taking the time out of your busy schedules. I know it's busy season right now. But yeah, so we're going to talk about automation and accounting here. So there'll be some good points. My name is Carla Iniguez, CEO of Cycle CPA, the landscaping accountants, providing anything from bookkeeping all the way to CFO level services. And we are specialized in the green industry. Excited to join you here tonight. If you want to take it over, Mike.
All right, I just didn't want to talk about it. Appreciate Carla having me. Little background myself, Mike Callahan, owned and started a lawn care and snow removal company in the Northeast, and exited the industry about 2 years ago. Business wasn't for sale, but basically the old saying goes, if the price is right, eventually it was for sale. So long story short, company called me and literally wanted to buy the company. I ended up hanging up on it the first time, Carla, because I actually thought it was my buddy Garrett Matthews out of Shreveport, Louisiana. But luckily they did call back, and they actually bought and acquired service businesses. And the reason why they were interested is we had automated my lawn care business. So to give you a little background on how automations came to be a part of my life and how eventually I wanted to take my life back from my business is literally was working over 100 hours a week, 7 days a week, sun up to sundown. Young lady I married out of high school sweetheart, basically came back, believe it or not, on February 14th, Valentine's Day, from a work road trip, and literally said, Mike, I'm leaving you. Your business runs your life. So basically after hitting rock bottom, I had to find a better way. So it was either get rid of the business or kind of reinvent the business. So you kind of guessed what route I took. I decided to reinvent the business. So I went online to Google and literally looked, how do I get my life back from my business? So literally went from 100 hours a week to 3 to 5 hours a week to an absentee owner at 30 days at a pop. So what I'm going to show you today is a very high level overview of what a fully automated lawn care or landscaping company can look like. And then we're going to dial in specifically off those foundational pieces, the 3 main secrets to automate your lawn care and landscape business accounting and start to drive the time back and create good positive cash flow. So any other questions or concerns before we dive into this, Carla?
Nope, we're ready to go. And thank you again, Mike, for joining me on this webinar.
Yeah, pleasure as always. So what we're going to be diving into is the 3 simple secrets to kill the chaos and explode your sales and basically set your accounting on autopilot. So turn up your speakers and here we go. So first thing we're going to be looking at here is I'm going to see if there is not a pointer, but basically if you're looking at it here, the thing I'm going to be looking at is a fully set up automated lawn care business. So a lot of people see me in the service autopilot ecosystem. We have actually now automated this system across multiple software platforms or CRMs, customer relationship management software. So no matter what software you're using or software you're not using, this can be done on multiple platforms. So not only Service Autopilot, Jobber, Service Titan, ZenMaid, and a couple of other platforms. So this is not going to be anything about Service Autopilot specifically. I'm literally going to open the hood and show you the step-by-step parts that I took to automate my service business and literally take my life back from my business. Now, my mission is to literally help other business owners go out and be able to scale and break $1 million while still having a work-life balance. So the first thing is if you're looking over to the left of the screen is there's an estimate request. So the first thing that you're going to need to build out before we get to the accounting piece is some foundational pieces to get the customers in there and build out the process. So what we're going to do is build out an estimate request that should be on your website. And when someone hits your website, it should automatically enter into your software and track what service they're interested in. So this is what this is going to do is allow us to have a personalized but automated conversation based on the services they're interested in. Now below that, on the far left, the office entry lead area is when someone calls your office, we're going to ask them, how did you hear about our services? And we're going to track the lead source. So did they come from the website? Did they hear about us on Facebook? Were they referred by a different customer? Once again, they're going to be entered into your software. Or in the far bottom left is the website and social media. So online demand buying. So online demand buying has been accelerated with COVID and now the post-COVID time. So People are demanding an Amazon, Netflix, Uber experience with your lawn care and landscape company. So this can be done through a bot on your website or social media. And later in the talk, I'm going to talk about how you can actually process and receive credit cards securely through the bot, as well as some other areas to speed up cash flow and close deals 24/7. Yes, even while you're sleeping, but we'll get to that a little bit later. But what we're looking at now is how are all the people getting into your software, whether it's through a bot, the website, or physically calling your office. Now, the next thing we've got here is the lead letters. That's the second step here. So they come to the website of the office or social media on the bot, and we're going to send out a thing called the lead letter. These are going to be the 5 or 6 main reasons why your landscaping or lawn care company is different than all the others. So right off the bat, automated, we're going to differentiate yourself from all the other competitors in your market. Now, before the estimate, the third column over here is going to go in and talk about short-term education. So if you've ever read the book, They Ask, You Answer by Marcus Sheridan, if you haven't, I highly recommend it. But the methodology here is we want to go in and educate the consumer to the specific service that they're interested in and create a higher perceived value. So what we're doing is creating and building you as the expert in that area to be the highest person price in your area. So obviously around the accounting part, we want to be able to go in and create a budget and charge the highest price in our market to drive those bottom line profits. So through short-term education, we're going to create you as the expert and create a higher perceived value so you can charge the higher price. I also recommend, along with this short-term education, that we go into the specific service they're interested in. So if somebody's interested in lawn mowing, we want to overcome any sales or price objections. So what I mean by that is, what are the questions or concerns they have when hiring a contractor for that service? So in my market in upstate New York, that was, do I need to be home to have the lawn mowed? And are you going to close the fence gate behind you? Because I'm worried about the kids and the dogs running out of the backyard of the house. And I'm not trusting myself to hire a contractor, but if I do hire the contractor, what happens if they don't close the door? So we're going to shorten that sales cycle. So it's going to take less time to close the sale, and we can charge at a higher price. Now, the next thing is the estimate follow-up to close. I'd like to call this process 20 days to close. Now, what we're going to do is create an automated system via automated email, automated text, and phone calls. Now, obviously, the emails and text messages go out automated, and what we're going to do is make them look personal, not automated, all branded up, but like a person actually sent this out from your office, personally following up, staged out for 20 days. Now, the phone calls come in as a form of a task or to-do, depending on the software you're using, complete with a call script and a deadline. So it's assigned to a specific person or role in the business, and it says, hey, call Mrs. Smith. We've dropped off that lawn mowing estimate 2 days ago. Here's what to say. If she says the price is too high, this is how we overcome that sales and price objection. And if she becomes a client, do this in the software to schedule her. If she doesn't become a client, do this. And if she says, I'm not sure if I'm going to hire or not, do this in the software. So what we're doing is creating a predictable system leading up to the sale that can be delegated and has predictable results day in and day out. Now, you may say, Mike, I'm a solo entrepreneur and I'm out in the field. I don't have time to make phone calls. One of the things you can do here, fully automated, is do a thing basically called a ringless voicemail bomb. So a ringless voicemail bomb literally hits the cell phone on file, looks like a missed call, and it's a pre-recorded message coming from someone in your office saying, hey, in my instance, be like, hey, it's Mike from Callahan's Lawn Care. So sorry I missed you. Wanted to leave you this voicemail regarding the estimate we dropped off 2 days ago. If you have any questions, call us back at this number, or feel free to accept the online estimate. We're going to create a predictable process. And they say statistically, all sales are, 80% of all sales are made on 5 or more attempts. So if you're not following up at least 5 or more times through omni-channel marketing or omni-channel follow-up via different channels, phone call, email, and text, you're probably missing out on about 80% of the sales in your market. So now that we've won this sale, this is where we're going to dive into and start talking about the automated accounting processes and some of the things we need to dial into. But I think it's really important to spend a few minutes, because if you don't have the foundational pieces building up to this, we're missing out on a lot of revenue and a lot of sales and the ability to close more sales while we're out in the field or working on the business, not in it, as Michael Gerber would say. So as we go in here, we're dialing into the one process. So the first thing I'm going to recommend automated is a welcome and wow process. So what a welcome and wow is going to do is, first thing, automatically, as soon as they become a customer, we're going to welcome and acclimate them to your business, what to expect. Now, we're going to get into a little more detail about credit card on file and the frequency and how we possibly can use that to ease up cash flow. But as a foundational piece of the automation right now, we should be firing off a PCI compliant credit card form. So it's secure. The credit card itself is tokenized. So the information of the person is not being jeopardized and your business is not at risk. So we're going to welcome them. We're going to acclimate them what to expect. We're also going to fire off an automation that's going to make sure that credit card's on file. And we're going to build something in the fact that if you do require a credit card on file or a deposit for all your services, those services cannot be dispatched in the software until that is actually been met as a criteria. So we're creating a predictable system that doesn't need to be managed or babysat by the business owner. Next thing below that is we're going to build some logic in the automation. So in that automation, we're going to do a 30, 60, and 90-day follow-up based on a reoccurring service. So Carla, if you come to my company, you buy a reoccurring weekly or biweekly lawn mowing, that service is going to now segment a follow-up at 30, 60, and 90 days. And it's going to look like a very personalized email from somebody in your office, literally saying, hey, Carla, how's the service going? Is there anything I can do? It's not branded up. It doesn't look all logoed. It seems really obvious right now that automated emails don't convert. They don't work as well as ones that look personal. So we want to make it actually look personal, like a real person sent it. But what you're going to find is we're going to get those little issues that eventually will escalate to cancellation issues before they actually happen. So traditionally, we would get an email back, hey, Mike, thanks for checking in. Actually, the guys and girls aren't blowing off the back patio on a regular basis. Can you address that? So we're going to capture those big issues before they become major cancellation issues. Now, it would kind of look really foolish if, Carla, you signed up for a one-time spring cleanup the first time you worked at my company, and I sent you a 30, 60, and 90-day follow-up. So what the automation does is actually has the logic or segmentation that says if this is a one-time service, only follow up once a few days after the service has been completed and billed out. So we're going to build some logic that ties into the service and the accounting of the billing being done. Next thing we're going to do is go in and nurture them a little bit. Happy holidays. We're going to educate them around the holiday, and we're going to wish them a happy holiday. We're just going to nurture them, build some relationship. Now, newsletter automation is something that we recommend using, and it's not your traditional newsletter. So what this is going to do is actually go out in the beginning of the month and go in, and based on your CRM or your accounting software, it's going to go in and segment your database. So who are your current clients, your leads, people that haven't bought from you, and your canceled clients. So the newsletter automation in the beginning of the month, I'm recommend goes to everybody in that database based on those statuses. Now, a couple of the canceled people may not be people you want to talk to, so we can opt them out, or being CAM spam compliant with email regulations, they can opt themselves out. But the idea is we're going to hit them once a month with education, what they should be doing in their yard or home the month in advance. So if we're going into the winter season, we may be talking about ornamental pruning. If you're down south, we're talking about pruning crepe myrtles. But we're talking about the proper timing and techniques, and maybe a soft one line at the bottom. By the way, we're here to help if you need some help with your pruning. So it's education with the soft upsell. Mid-season or mid-month, we're also going to go into that accounting software where it's segmented. We're going to look at who are all the people that are leads and canceled clients. They're not actually people getting charged out for services right now. In mid-month, we're going to have a separate communication for clients and non-clients. So we can do mid-month promotions and maybe say, hey, if you sign up before the end of the month, we'll give you 10% off your first service. But obviously, you don't want to offer that to the people who have already signed up. So we need to have a segmented database that we can go in and talk to where they're at in the life cycle of that part. Now, the next thing is a dispatch notification. So there's nothing worse, especially in the spring or the summer right now where it's really hot and it's burning up, that we want to go in and actually say, hey, Carla, we're going to be at your house in the next 2 days. For any reason, if you do not want us there, let us know. Which is what we did at Callahan's Lawn Care is if you skipped a mowing, we charged 50%. And if you skipped a mowing less than 24 hours, we charged you 100%. So that started to go into covering that overhead and predictable reoccurring income. So we left it up to the client, so we wouldn't have to go halfway across town to cut that lawn if they wanted it cut. And we took the approach to basically say, you know, we don't want to cut it because it does need to be cut. But especially in your graduation season, you don't know. They may want you to run it over and clean it up. So the next thing we're going to do here in that box is do a 5-star review automation. So we call this NPS, the social review. So this is going to go out and survey all your clients. And if they rank out of a 1 to 10 score, a 9 or a 10, we're going to send them out to your Google, Yelp, and Facebook to get social reviews. And if it's an 8 or below, we send them back to the office to basically save that cancellation. We'd report on that. So the next thing below that is an overdue invoice and expiring credit card accounting automation that we're tying into this. So what we're going to do is I'm going to dial into some more detail in a little bit, in a few minutes. But main thing is when you have that credit card on file, if the card is about to expire or expires, the automation is going to see that trigger, say 45 days in advance of the credit card expiring, and it's going to automatically fire out that PCI compliant credit card to update the credit card. Now, if at 10 days we don't have the card, it's going to reach back out and do it again. And then eventually, right before it expires, it may assign a task or a to-do for someone in your office to physically call that person. So we're going to try an automated process. And if that doesn't convert, we try a human process with a deadline and a call script to make sure it happens. In addition, we're going to dial into the details here in a minute or two of overdue invoices. So anywhere from 1 to 31 days, or 30 days, 31 to 60, 61 to 90, and 90 days past due. And then the final thing on the last here is I also recommend is doing between 5 to 8 seasonal upsells to go in and raise that client lifetime value. So when you're automating this, you want to look at the accounting and scheduling software to see some basic things. So do they have the service scheduled? Is it on a waiting list? Or is there estimate in play? Now, there's a few others, but those are the big ones because there's nothing worse than getting an email blast from a national franchise. Hey, it's time to sign up for spring cleanup. If you haven't signed up, please click the button below to request an estimate. Basically, what you're telling your clients is you don't care about them, you're spamming them, and they are not of value to you. So you really want to be able to talk to specifically where they're at in that life cycle, what services they have, what they don't have, and any estimates. Someone says they can't see the chart that well. I'll be happy to provide a PDF, Carla, to you, and you guys can actually share out these slides as well. I know sometimes with the screen share, it's tough to see that. But let's dial into really the accounting process. So this PCI compliant credit card update form is this an example out of one of the softwares that we use. But basically what this is it is a tokenized lockdown card. So as soon as that transition from lead to client happens, this card is, or this form is automatically emailed out. And as soon as they hit it, basically each part of that information is bit up in these little tokens that are encrypted, and they send it back to the credit card processor. So this is probably the best practice that we do this to update the credit card to get that card on file. Next thing I want to talk about is automating your invoicing. So across many of these platforms, specifically Service Autopilot, but I believe Jobber has some very similar options, is that we want to go out and create an automated invoicing process. So what I'm going to recommend is if it's not a reoccurring client, we get at least a 50% deposit to cover some of those fixed costs, and we require a credit card on file. Now, Carla, you may look at me and go, Mike, well, I'm just a small business. I don't want to pay 3% for credit card processing. So what I'm going to recommend as best practice is you're not really going to be incurring that cost, because when we build that budget or update that budget for this year, we would add 3% into the cost of doing business of the 3%. So if we're doing $1 million in sales, we'd multiply that million by 3%. And my guess with the rough math off the top of my head is that's about $30,000 of credit card processing. Now you may balk at that and say, well, that $30,000 really is in my pocket. I need to keep that. But if you put it in your budget and it's a cost of doing business, just assume that cost and it's built into your hourly rate. But the benefit of that is huge. So what we've got now is we've got OneTime Services, our current clients. We're going to do a deposit on the credit card, and we have a credit card on file that we can bill that day. So we're going to do daily billing for any one-time jobs, any reoccurring weekly or bi-weekly jobs such as lawn mowing. What we're going to do is require a credit card on file. So everything I do this week, Carla, the following Tuesday, we're going to go in. And this is a screenshot of literally what you could do as you go in and select all of the cards, literally one click, and you hit charge cards. It's going to ask you, do you want to charge the card? So literally in 3 clicks, a matter of 2 minutes, maybe, if you're reviewing the list, I can run my credit cards from the whole entire past week on Tuesday and have the money in the bank before payroll on Friday. So cash flow is king in a service business, especially if you're going to scale. So by creating that next Tuesday, the idea is everything that we've done the following week is done. If we're backed up with rain delay on the weekends, we have time to get that work done. We also give them Monday, if there's a service issue, for us to go fix it or not charge the card until we make it right. So it gives you a buffer for dissatisfied customers, Because face it, at scale, when you're doing 600-700 lawn mowings a week, you're going to have a few that pop up. We saw that. Obviously, we were striving for perfection, but that's never going to happen in the real world when you've got 19 or 20 trucks running around. So we want to build that buffer. But the idea is we are going to get paid for the payroll and expenses that we incur and have to pay for the following Friday. So cash flow is really rolling in. So the other idea is with this is if we do end up having to create invoices, which I believe we all do, in here with Service Autopilot and several of the other platforms, specifically this is Service Autopilot screenshot, is that the system can be defaulted to bill either daily, weekly, or monthly. And when it hits midnight, all of those invoices are generated. So we would generate probably close to 1,000 invoices a week. There is no manual entry now. So everything's in there. It's assigned to the chart of accounts, and Carla and team probably loves it because everything's matched up nicely. But the cool thing is when you sync to QuickBooks Online or QuickBooks Desktop, and Carla's going to be diving into those details later, all those invoices automatically transfer over. So those hours and hours and hours of invoicing at the end of the month, of the first, driving in and trying to get paid, those days are gone. We've got cash in the bank and we've minimized our risk. So before I go in and kind of dial into my last slide here, Carla, do you have any questions or comments up to this point? I kind of see you nodding your head, and but I got a lot of content I'm trying to jam in here in about 30 minutes. So
yeah, no. I love this subscription-based model. I don't think that anybody should be invoicing manually, especially for reoccurring clients like this, right? Because it's predictable, like you said. So you need to automate this. So no, great.
Awesome.
Great points.
So the next thing I've got here is in the middle of the screen, we're looking at that overdue invoice and expiring credit card. So a lot of people kind of want to know, what does automation kind of look like in the back end? So like I said, we automate on several different platforms. So Keep by Infusionsoft is the platform I first started automating my lawn care business. So there's a little diagram with some arrows at the bottom left of the screen next to our pictures here. What you can see is basically there's a start goal. It's a little play button, it looks like. It's going to assign an owner. So it's actually assigning to somebody in the office, so they are responsible for what should happen. And then it's automatically sending out an email. And that is the first of several collection emails. So once that account goes past due, an email is sent. It's going to wait another 3 days. It's going to send another email. It's going to start to escalate it. And then it's going to wait another 3 days. And then there's a task to make the phone call. So what I'm going to recommend is this should escalate from your 30, or basically your 1 to 30 days, and then 31 to 60, and then 61 to 90 or past 90. So obviously we probably are not going to wait all the way to 90 days, but in this series of automations, if it continues to escalate, we're actually going to assign someone to actually go to a collection agency or take it to the local court and actually take that to collections. But what we're doing is creating a standardized process, because I know, at least in my lawn care company, even at the largest size, we got going so busy in the spring, in late spring, that chasing after money that was past due kind of was in the rearview mirror. We're looking at the money we needed to make and all the new sales. But if we let this go, this can absolutely erode our bottom line profit and our ability to be liquid and actually go in. So the reason why I recommend that subscription-based billing basically for the mowing is that if someone defaults payment, the system can automatically alert someone not to schedule the next job. So instead of being out 4 or 5 mowings in the month, your worst case scenario is maybe a $45 or $50 mowing. So not only are you increasing your cash flow and your liquidity and the health of your business, but you're minimizing that overdue collection. And that is going to be the system to go out and basically automate your sales, take your life back and buy time back. And on the social media, as we pop here back a couple slides, on the bottom left here, the website social media chatbot. So this can also be done through Facebook Messenger, your website, and now Instagram. That whole sales process can be automated with PCI compliant credit forms, grabbing the information and charging their card 24/7 live inside the bot. So they can get a live estimate. It goes out to Zillow, grants property specific pricing. Based on your pricing, it would give them the price. It would alert you to actually go out and do the job. And in the meantime, it would grab the credit card and actually charge them for the first service. So it takes that shopper off the market. And in my opinion, if your lawn care company has not created on-demand buying on your website, social media, and Instagram, when today's consumers are looking for that, if they don't find it on your website or social media, they're going to go to the next competitor that's adopted to this technology and the shift in buying habits. So very similar to Wayne Gretzky, the hockey player. He wanted it to be where the puck was going to be, not where it's at. Our lawn care company really needs to be where the buying habits are going, or actually have shifted now, instead of where everybody else, 99% of the people in our markets are. So that's what I got for you, Carla. Happy to answer any questions at the end of this, or if you have any questions right now, happy to dial in. But I'm really excited to see what you've got in QuickBooks Online for us right now.
No, thanks, Mike. That was awesome, Mike. You help a lot of lawn care companies really automate their business, in turn making their companies more profitable, and really help their companies run like a well-oiled machine. I love what you're doing with the sales all the way up to the accounting aspect. It's very important. So thank you for that. So talking about automation and how we can automate all aspects of the business. So you don't want to end up like this guy here with all this paperwork on his wheelbarrow. So how can we take your accounting and digitize it in this modern world, right? So let's move forward. So we use different types of software so that we can digitize all aspects of your accounting. So from tracking your expenses to invoicing, to job costing, to running payroll, right? We do that all on QuickBooks Online. Some people use other third-party apps, such as Java, Service Autopilot for invoicing, but then you still need that accounting aspect for like your assets, your expenses, and all that good stuff. So really recommend QuickBooks Online for that. That way you can do away with your paper and pen or your Excel sheets and minimize the time you are spending on tracking all your receipts down. So, and then we use Bill.com for paying your vendors. And really automating that piece and digitizing everything. That way you don't have to spend 30 minutes every week signing checks for every one of your vendors. Well, not everyone, but a lot of people are on Bill.com. Vendors are now accepting payments through Bill.com. Bill.com syncs with QuickBooks Online, so it's a great option for automating that piece of the business. So, speaking about collections and your AR process, if you are invoicing through QuickBooks Online, I really need to go over this. I see a lot of landscape business owners not going through this process correctly on QuickBooks Online. If you're invoicing and then receiving payments, as far as checks or cash payments, are not being recorded correctly on QuickBooks Online. This procedure really is important if you are using QuickBooks Online to invoice, because it could overstate your sales. And if you don't follow this procedure, you may be paying taxes on sales that didn't really even exist. So let's go through what that process looks like. So here is an invoice that you have created on QuickBooks Online. Our customer is Bill's Windsurf Shop, gardening service, $350, right? We all know this invoice. Let's say now it's 2 weeks later, you've received the check for this invoice, right? And the check you have in your hand, but you haven't deposited yet into your bank account, because you're waiting to receive other checks, right? You're not going to just go to the bank and maybe deposit all of them at once, or you're going to do a bulk deposit through your remote service merchant machine. Whatever it is, you're just holding off and waiting on depositing it, but you still have received the payment. So you're going to hit receive the payment, as you see here on the top right-hand corner, in that box. Okay, so this is where everybody gets this part wrong of the process. So we have our payment date. We received the check for a bill. And where it says deposit to, if I had the ability to click that drop-down menu, it'll show all of your business bank accounts, savings accounts. So you can either put deposit to your checkings, your savings, and it'll always have this function on QuickBooks Online. It's called Undeposited Funds. So the reason why people get mixed up in this is because people put deposit to checking account, and that is incorrect. We have to put deposit to undeposited funds because we have the check in our hand yet. We haven't deposited yet because we're waiting to collect checks all week and we want to visit the bank maybe once or twice a week, right? We don't want to go in for every single check. So basically, undeposited funds is just a holding account that should be at a zero balance, ideally by the end of the year or every quarter. So you're going to hit deposit to undeposited funds. This check, this $350 check, is going to go to a holdings account in QuickBooks. Think about it that way. All right, so now that's in undeposited funds. Now it's the next day, you've collected a payment from Cool Cars, you put that in undeposited funds too, which is another client of yours, let's say. And now you're ready to go to the bank with your 2 checks, because now it makes sense to go to the bank again. And the next part of the procedure is to go to new, and then it's a plus sign on the left-hand side of QuickBooks Online. Once you click that new, and then you go to bank deposit, this bank deposit screen here will show up on your screen. Then for account on the top left-hand corner, you'll see, okay, yes, I'm going to deposit this into my checking account. What's the date? I'm going to the bank today. And what are the deposits I'm going to be making? I'm going to deposit that Bill's Windsurf Shop check for $350. And I'm also going to deposit the Cool Cars check for $1,675.52. So in total, my bulk deposit's going to total $2,025.52, right? So that's the correct procedure. Rather than, putting the bills first, $350 by itself, and then the Cool Cars by itself, that's not going to match what's in the bank, really, how it hits your account. So once that procedure is set, when you're syncing QuickBooks Online to your checking account and it's downloading all of your transactions every day, it'll download that deposit, the $2,025 deposit, right? And because this is a sample company, it doesn't like 100% show up the correct way, but we'll pretend this says 2025 here. But basically, it'll download, and QuickBooks is very smart this way. It'll say 1 record found, 2 invoices are matched to this 1 deposit. You'll hit match, and now your books are in reconciliation. What happens is, again, people are hitting checking account. Sales are now being posted and on your bank register. But then when it gets downloaded again here on the bank feed screen, you're putting it towards sales again. So now you're duplicating things because you're not following the procedure. And I've seen this, unfortunately, more times than I want to, where people are paying more taxes on sales that don't really exist. So just wanted to bring that up in this collection process webinar. And just a quick tip, QuickBooks Online actually offers a sample account that you guys can, work with and just kind of play around with the function. If you're kind of nervous to play on your QuickBooks Online and just, work with the functions on there, you can use this URL here, and it'll take you to Craig's Design and Landscaping Services, which is funny because the QuickBooks Online sample company is actually a landscaping company, which is nice. So feel free to just use that URL to kind of play around with the different functions on there before you start these procedures. Okay, perfect. So on to accounts receivable. All right, so what reports are important for accounts receivable? So accounts receivable, the aging summary report, which is a higher level overview report, and the accounts receivable aging detail report, right? And these are, I'm just saying these are on QuickBooks, but they can be on any other accounting software as well, Xero, Sage, all of those, other accounting softwares. So just something to keep in mind. So the older a receivable is the more difficult that it gets to collect. So it's very important that you keep your eyes on these 2 reports. at least once a week if you're pulling these reports from any accounting software or CRM that you're using. So on QuickBooks, the AR aging summary, so the accounts receivable aging summary, again, this is more of a bird's eye view report, shows up like this. So your clients are on the left-hand side. Current is what's not due yet. 1 to 30, that's what's overdue. 31 to 60, 61 to 90 days, and 91 days and over. So I would, if you're pulling up this report, again, you're concerned with, not with current really, because that's not due yet. So with the other 4 columns on the right-hand side. Again, so if you are wondering, okay, I see Amy's Bird Sanctuary here. It's overdue 1 to 30 days, $239. But I want to see more detail about that, like what invoices are overdue, what makes up that $239, right? So for that, we'll go to the accounts receivable detail report. Here we go. We're in the detail report, and we can see all of the actual individual invoices that are overdue by the days. So gives you a better view of what's overdue. Again, please look at these reports at least once a week and have a procedure in place for collections, as Mike had mentioned earlier. So collect with regard to accounts receivable in less days than compared to payment with accounts payable. So if, again, cash flow, if you collect sooner, you're able to pay your vendors quicker, right? And you're able to cover your accounts payable. If you're growing quickly, make sure that you have found a credit line available to you to fund any outstanding receivables. Another way that you can keep your accounts receivable percentage down is to incentivize your administrative staff for collecting the receivables before the deadline, like 30 or 60 days. So calculate the percentage relating to the accounts. And let's say that you have a goal of to stay under 15%. And if they do, then they get a bonus, or they get a gift, or they get a gift card, or whatever it is, really incentivizing your staff to keep that AR percentage down. Perfect. Oops. Trying to move myself. There I go. Okay, so accounts receivable management in landscaping companies is just so important because of cash flow, and especially with the seasonality of it. You want to be able to manage your cash flow correctly. So what kind of calculations can you do in order to keep track of your accounts receivable? There's 2 calculations that are very helpful. So accounts receivable turnover. The formula for that is net credit sales divided by your average net accounts receivable. The average for the green industry is 29. What does this measure? So this measures the number of times that your accounts receivable are incurred and collected during a period, and indicates the efficiency of the collection procedures. So the higher that number, the more efficient you're being at collecting your accounts receivable. So here's an example. ABC Landscapes has a beginning accounts receivable of $70,000. So let's say at the January 1st, they have a beginning AR number of $70,000. At the end of the year, December 31st, they had $120,000 in accounts receivable. And the net credit sales for the year is $1.6 million. So again, we have our beginning accounts receivable number at January 1st, or any period that you're doing. You could do this on a quarterly basis as well. So you have $70,000 at the beginning of the year plus $120,000 December 31st. That equals $190,000. Divide that by 2 to get the average. That's $95,000 on average for the whole year. So you have 1.6 million divided by that $95,000. You get 16.84 accounts receivable turnover. So what does this say? This means this company is collecting their accounts receivable inefficiently or lower than the industry average. So they need to do something. They need to incentivize their employees. They need to look at that AR aging summary every week. They need to send people to collections, right? Anything that can really incentivize the employees or clients in order for them to get paid earlier, because this is really going to affect cash flow, and it's going to affect your ability to pay your accounts payables, your salaries, and all of that good stuff. So this is a great formula to use. Again, I did it for the whole year, but you can measure this in any period, such as quarters or even months, or however you want to do it. And next formula is average collection days. So the average for the green industry is 21.6 days. The formula is accounts receivable divided by sales, divide that by days in a period. So in this example, we have 100,000 in accounts receivable for the period that we're measuring. Divide that 1.3 million in sales, divided by 365 days for the year. That's the period we're measuring. So here we have that the average collection days were 28.1. That's how long it takes us on average to collect AR. As you can see, the average for the industry is less than that, 21.6. So again, using the same strategies to speed up the collection process here is what is necessary to get this company here up to par. And you have to build invoicing into your daily schedule. Use something called time blocking. Reserve some time for yourself early in the morning or on the weekend. I know it's hard at night once you're done. If you're, a one-person show, or if you have just a couple of employees, you can get very busy, but don't wait until it's less busy. It really just builds up. For example, I had a client who, when he first switched over to us, he was actually losing clients because he wouldn't bill. Like, his clients were getting like these huge invoices, and they just didn't want to pay the big invoices. They wanted to get billed on a regular basis. And really, he had a lot of loss of clients for billing them late in the game. So it's really not good for you or your clients. Your clients don't want that. They want to be billed on a regular basis. And using the different automations, even that Mike pointed out, is just going to be so key for that. So awesome. And it also, brings up that, like, you're professional, right? You're here, you're invoicing them on the timely manner. So that's also nice. Awesome. Let's say that a client of yours is just, that they're just not going to pay you. You would have to write this invoice off as bad debt expense for them not paying you. And I mean, if you're pulling up your profit and loss report on an accrual basis, you'll see the bad debt expense. On a cash basis, you really don't post bad debt expense, because cash in, cash out, like, if you didn't receive the money, it's not there anyway. So no need to post bad debt expense on that end. But on an accrual basis, you do. So something to keep in mind. And we spoke a lot about accounts receivable and that process and the formulas that you can use for accounts receivable management and just looking after that. But accounts payable is just as important, especially with a lot of vendors moving to a more virtual setting, and where they're receiving payments in a more automated way. A lot of vendors are now on bill.com. We use this for a lot of our clients to pay their vendors, or even if they're not on bill.com and you decide to start using bill.com, you can invite your vendors to use bill.com and they won't have to pay really, and you can then pay them in a more automated way. So the way this works is you receive your purchase order, and through Bill.com, you scan in your invoicing. Bill.com takes all the data from your paper invoice and automates it in a way where you can just pay from your bank in ACH or wire, however you would like to pay that vendor. And that gets all paid through Bill.com. And then that gets synced back to QuickBooks Online. That way your accounting function has all of those bills and payments, and everything goes full circle. So really recommend looking at Bill.com for your accounts payable solution here. And it integrates very well with QuickBooks Online. Perfect. Well, we'll look into some questions here. I guess, Mike, that was it for me. Let's see.
Yeah, awesome presentation. Really, a lot of great takeaways there. I wish in the early days somebody had showed me that stuff, but that Bill.com is great, obviously, for paying those vendors. That was one of the keys to our success. We paid our vendors, especially in the winter, every 7 days, almost on the same frequencies we paid our employees. That allowed us to get the best vendors. So that cash flow is key, and be able to have that ability to pay them electronically is really big. I know one of the questions that popped up in the Q&A was, what was the difference between residential and commercial? I just service companies, not individuals. Interesting, but maybe not applicable. Really, honestly, that's a really good question. So what I would recommend is, if that is a question in your company and you're looking at automating your business and you only do residential or only do commercial, or you do both, really what we did is, I would say about 70 to 80% of our business at one point was commercial and the rest was residential. And then we shifted to basically more of a residential model, but we still had some really large clients like Coca-Cola bottling plants, some other ones that actually were won through the automated process. Because who is buying your services? It's not necessarily a company. It's someone in the purchasing offer, or a property manager, or a board of people on an HOA board. So as you look at it, I highly recommend not sending commercial clients maybe the same exact information. But once again, if you segment your database, commercial and residential, you can have an automated conversation based on not only where they're at in the customer life cycle, but based on the type of property and the proper communication. But we did land six-figure jobs through an automated follow-up. But the timing was a little bit different. The communication may have been a little bit different, but it was geared towards commercial versus residential. So if you're looking at this and thinking maybe that doesn't work, all the big firms use enterprise software called Salesforce, and commercial companies are selling to business, B2B, or business to business, or business to consumer. Automations will work. You just have to make sure the communication and the cadence that you communicate is appropriate to the person you're talking with or the business. So I think that's a great question, because that's one of the biggest misconceptions. And believe it or not, without mentioning names, we had Fortune 500 companies actually want to use company credit cards because it was easier for their accounts to be posted to certain budgets in that. So it doesn't hurt to try to get those credit cards for even those big accounts, because sometimes if I own a business, I want to use my United Airlines mile credit card to pay for my lawn care and landscaping, because I get those airline miles and eventually I can go on vacation with it. So you'll be surprised when you do ask. A lot of people, even companies, will give you those cards. So I think that was a great question there.
Yeah, no, that's good to know for sure. And I could definitely see that happening, even when I was auditing Fortune 500 companies and their landscaping services. So definitely saw that 100%. So that's a good point. And a lot of people are just asking, if we're going to send this video out. We're going to send this video out afterwards in an email. So you'll get, if you've missed anything or want to take more notes, you'll be able to watch this video on later. But yeah, so it looks like, that was all the questions. So again, if anybody wants any help with bookkeeping, accounting, or CFO level services, feel free to reach out to me at Carla P at cyclecpa.com, or join my Facebook group, Landscaping Accountant. And I just want to thank you again, Mike, for the insight here on automating your accounting and collection process. Those were great points. And yeah.
Yeah, really appreciate it. Hopefully we can do this again. And if anybody needs some help auditing the business or setting up basically production rate based estimating and creating a process for predictable estimates and making sure that after your accounting is set up, that you're actually following through in the field and actually getting those estimates done correctly and billing correctly. As far as estimating and dollar per hour, we do specialize in production rate based estimating and automating your business. And that's kind of that stepping stone, because we want to organize it, automate it, and then eventually go out and dominate that market. So Carla, thanks again. Really appreciate it. And hopefully we'll have another one of these soon.
Yeah, no problem. Have a good night.
All right. Have a good one.
Bye.